I think in our coverage, it's not a big deal. Probably the biggest impact would be Apple and all the products that they manufacture. They've done a really good job, I think, over the years of redesigning their products. If there is an issue in terms of a component cost, which would come in the way of a tariff. So I'm not overly concerned with it. The stock is dirt cheap. So, anytime you get a headwind like this, it's more than embedded in the stock price already.
You know what seems to be sort of floating below the radar since we have had so many headlines and so many market-moving events this week? The fact that Facebook hit a record high yesterday. What do you think of that?
While I look at Facebook, it still hasn't had a great year. My average stock is up 37% year to date, and I look at Apple, Google, Facebook, they're all up just over 10%. And I look at Facebook, it's the most profitable company we cover. I also think it's probably one of the most profitable in the world, outside of my group, and it sells at like 21 times X cash. So Facebook is really tremendous value, and I think when it got down to like 160 range, value investors were poking around, as they should have.
Now you got Twitter, which is close to doubling for the year.
Yeah.
And arguably, judging from some of their curation efforts, are they stealing share, at least on the newsfeed front?
So we don't cover Twitter, but I will say just broad-based, there's a big digital advertising market. It's enormous, $210 billion. Even if you look at Google, they only have 18% of that spend, and Facebook only has 7%. So, this whole digital transformation, this fourth industrial revolution, all these major companies can benefit from that, and we're still very, very early. So even if you come out and you stumble a little bit in the early years, if you've got a good platform, you can still benefit long term.
Yeah, the next tier below the mega cap FANG, first of all, FANG this year has been driven, to your point, by Amazon and Netflix. Alphabet and Facebook have been fine. They've beaten the overall market, but have not really driven things. But that whole underneath tier of web-based companies, digital advertising, especially software, has really been the growth investors' paradise so far. And in fact, if you look at, and this obviously isn't just tech, but the IPO index of recent IPOs made a new high. So there is this risk appetite below the surface. It's just not showing up as much in the Dow and even in the S&P because financials have been weak and semi-cap equipment is, so some cyclical areas have taken a hit.
Brian, this interesting call from China for the rest of the world to sort of rise up and push back against the United States and its tariffs. After a while, looking at Europe especially, this could become a concern, could it not? But the market has a lot of courage so far this year, not really worrying about things that haven't happened yet.
Yeah, I tend to think things will work their way out. I think there's a lot of this trade talk is, to me, a lot more marketing than anything else. And does it have a material impact on my coverage? I really don't think it will. I really don't. And to Michael's point, in my group outside of Apple, it's these software companies. And when I talk about, Facebook is banned in China, Google's banned in China, Amazon doesn't do that much. My next generation software companies like a MongoDB, Hortonworks, Workday, Splunk, they do like nothing in China. So these type of companies, really wouldn't have an impact if something was material to happen here.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.